What's up guys, Taiki here, and welcome to part 4 on why I think Canto has a reasonable chance of hitting all-time highs later this year. I'm still a little sick today, so apologies if my voice sounds a little weird, or if I start coughing, but let's try to get through this. I promised you guys weekly updates from here on out. I could be wrong, right, and I could be trolled, but you know, I'll stick to my guns, my convictions, and I'll lay out updates and where I stand on the thesis in this video. So I laid out the thesis last month, 4 weeks ago, and the price of Canto was at 14 cents, and now it's sitting at 22.4. We are seeing a minus 7% correction in the price of Canto, which, you know, obviously we don't like to see that, but, you know, maybe it's just going up. Now it's consolidating, and maybe, you know, it's setting up for price to go higher. I will say that maybe the majority of the price action in the first couple of weeks was purely hype. But now that Canto, they launched their RWA strategy earlier this week, now they have to deliver. Now we have to see the actual metrics grow, or it's just going to go down, right? So I'll talk about all that later. But before that, I need to first talk about, you know, why I like Canto in the first place, and it's all around the maker trade. And if you actually, you know, watch part 1, part 2, part 3 of the Canto thesis, you'll realize that, you know, I'm mostly spending my time talking about how bullish I am maker, because Maker is one of those trades that I think is, you know, somewhat contrarian. It's a hated coin, but, you know, I've been pretty convicted in that I think the Maker-ETH ratio is going to continue going up, and it's going to eventually hit 1, right? So 1 Maker equals 1 ETH parity, right? Maker-ETH parity, and then eventually go much higher. And as you can see, right, I mean, it's literally up only. And yes, it's down a little bit this week, but I still think that the trend is intact. But, you know, like, why do I think this is the case? Well, you know, Maker, they own $2.5 billion worth of treasuries, right? And all those treasuries, they're earning the risk-free rate at roughly, you know, let's say 5.25%, 5.5%. And, you know, every month, every 2 months, I mean, yeah, basically every couple of weeks, those T-bills mature, and those interest payments get sent on-chain, and then with those profits, you know, they're buying back their own token. And Maker is actually hitting all-time highs in terms of revenues ever since inception. And their, you know, annualized fees are roughly $212 million per year, and it's only going to go up. Why? Because they're going to keep buying treasuries, and, you know, as long as rates stay higher for longer, you know, like, I mean, they're literally a cash flow machine. You can kind of see this at makerburn.com. The system surplus. So, you know, the protocol buys back its own token if the system surplus is over 50 million. And as you can see, you know, every week, every couple of weeks, millions of dollars hit the chain. And what's it doing, right? With those tokens, with those DAI, you know, every 2 hours, they're buying $20,000 of their own token. And, you know, they're building out a pretty hefty on-chain liquidity, right? Protocol-owned liquidity. Maker is actually the most liquid altcoin on chain now, and like when I say altcoin, right, like not taking into account like stable coins, Ether, Bitcoin, etc. And, you know, I mean, yeah, it's a very liquid token, and their profits just keep going up and up and up. If you look at the DAI supply, you see that it's hitting new local highs at 5.6 billion. Of course, if you know, look at the all-time chart, it's like nowhere near its all-time highs. You know, it's at roughly 10 billion. But I suspect that sometime in Q2, or Q1 or Q2 of next year, I would expect DAI to be approaching $10 billion. And, you know, like, why is this bullish? Well, because, you know, if the DAI supply is expanding, then that means that, you know, DAI is being backed by more and more USDC. And as, you know, the DAI backing increases, you know, Maker, the DAO, can redeem those USDC into dollars and buy T-bills with it. And, you know, that's kind of what's going on here. And the bull case for DAI and like Maker is that, you know, the adoption for the DSR, the DAI saving rate, is going to continue going up. So the DSR is 5%, so you can stake DAI and earn 5%, right? So basically just taking the risk-free rate off-chain, and transferring it on-chain, and for, you know, the added friction, the convenience and whatnot, you know, the Maker DAO, the protocol, makes whatever spread, you know, like that counts as profit, and that, you know, I mean, you're seeing the number here. I mean, it's a pretty simple thesis, and if you actually look at the numbers, you know, I mean, yeah, like they just continue to buy RWAs, right? It's, you know, I don't think it's like that complicated. The MKRETH thesis just says that, you know, if you look at on-chain activity, on-chain data, you know, Ether is now inflationary. And if you look at, you know, the base fees on mainnet, we're basically back to post FTX levels. No one's really using the chain, and Ether is inflationary. And in this environment, when retail interest is basically at all-time lows, no one really cares about crypto. If coins are inflating, then who's going to be the buyer? Of course, like not all inflationary tokens are bad, and not all tokens that are not inflationary are good. You have to study it on a case-by-case basis. But that's the merits behind the MKRETH thesis. It's the only token that has structural inflows, regardless of what's happening in the market, right? Like as long as people are continuing to buy DAI to stake in the DSR, the backing behind DAI increases, they're going to buy more T-bills. And yeah, I mean, it's pretty simple, right? It's basically, as DAI supply goes up, profitability goes up, etc. Of course, there's some nuances there, but that's kind of the merits of the thesis. And in this shrinking, like I kind of consider crypto to be in like a shrinking pie, and I do expect it to grow sometime in the future. But I think right now the only growth sector in crypto is tokenized treasuries, right, in a higher for longer environment. Stablecoins, even though they're small and people don't really care about crypto, they're actually the 16th largest holder of 16th largest sovereign holder of U.S. treasuries, right? This is mostly Tether, a Circle, right? Coinbase and Circle, and also MakerDAO, of course. And I think Tether is the 25th largest holder of U.S. treasuries, and they make $1 billion in profits every single quarter. They're literally a profit-making machine. And like I mentioned, right? And Maker is going to continue to buying T-bills, so there's like some popular traders like CL saying that the RWA thesis probably runs harder for a bit longer, and the idea is to you can just like buy Maker, sit on Maker, just outperform Ether, right, in the short to medium term, as long as rates are still higher. And then, at some point, the bull market returns, there's going to be some euphoria. And at that point, it's not that Maker is going to be a bad hold, but maybe the merits to holding Maker relative to other crypto assets, maybe there's like more merits to like rotate out. So this my idea is that, okay, as long as the markets stay boring, I expect MKRETH to continue grinding up. And, people don't like Maker because they have cognitive biases against it, right? And the idea around CANTO is that if Maker continues to go up, then chances are smaller coins like CANTO can potentially outperform, right? So I mentioned here, September 19th, even if you don't like Maker, which is completely understandable, the majority of crypto participants do not like Maker because they're just like biased against it. If Maker continues to go up, then maybe CANTO can play some catch up here. And the price action in for like Bitcoin and Ether recently has been pretty interesting. So obviously, we saw like the fake Bitcoin ETF pump. And it's pretty interesting, right? Because on the surface you might think that, well, this is a fake news and it should retrace, right? It's like Cointelegraph in turn, it's literal fake news. But you kind of see there's some shift in market structure and the market tape. So what I mean by this is, if you look at this pump here, right? This was the XRP candle when they won its case against the SEC. But the entire pump in Bitcoin was retraced in 24 hours, right? Like literally retraced. And then here was the Grayscale news, and the entire pump was retraced in 48 hours. So generally this means that maybe we're not in like bullish, we're not in like a bullish market environment, because if good news can't take us higher, then the bears are in control. However, with this pump, like Bitcoin went up 10% on fake news, but we continue to go up, right? And when I saw this, first of all, like this is pretty interesting, right? And if you actually look at the price action for Maker and other, I guess like crypto assets on October 16th, we can kind of zoom in here. Let's look at the 4 hour and let's shift to MKR. And we can overlay the chart of BTC here. Let's just say same percent scale. And you can kind of see that, right? When Bitcoin went up, right? Like when markets were euphoric, right? Because the markets thought that this was real news and they were like just like buying crypto hand over fist, right? It was like risk on market conditions. So Bitcoin went up, but in the same environment or in the same time frame, Maker went down. So I thought this was pretty interesting, and it kind of reconfirms or like reaffirms my thesis that Maker is something that people want to hold when there's market uncertainty, right? When people don't know like what's going to happen in the next couple of months. But if they still want to hold like a crypto asset, like maybe Maker has more merit than like let's say for example ETH, and you can kind of see this in the chart, right? I mean it's literally up only. But the fact that Maker went down when Bitcoin and other like risk-on assets went up implies that okay, like maybe there were some algos, right? Or maybe there were some hedge funds or like just funds in general that held a bunch of Maker and said, you know what, like okay, it seems risk-on, let's sell Maker, right? Let's rotate from Maker and rotate into risk-on assets, and it does reaffirm this thesis, right? And this this has been my thesis since July, and it's so like I mentioned this on the 16th. So first of all, it reconfirms the thesis, right? Okay, like the market is telling me that this is how the market views Maker, and it doesn't matter how I view Maker; it matters how the market views Maker, right? Because like if I just claim that Maker is bullish and like Maker goes down and like the market is wrong, right? If I claim that the market is wrong, then I'm just an idiot. You kind of have to have the market agree with your views, and then like that way I can build more conviction, and it does give me some warning signals. If Bitcoin continues to just chat up, then chances are, let's like take off this. Let's go to the daily. If this is like the risk on signal where just like this this is like the bottom, right? I mean this is like the ape signal. Then chances are like Maker just underperforms, and the entire MKRETH thesis kind of just gets invalidated. And when I say it gets invalidated, it doesn't mean that Maker is gonna like just go down to like $1,000, because like literally like they just make a shit ton of money, right? Like it's very difficult for this thing to just go down in price, just generally. But it's just just some warning signals, and so that's kind of how I view Maker, and I still like it because if you look at this proposal that passed yesterday, executed on the 19th, the Andromeda and Clydesdale vaults increased their respective debt ceilings to $3 billion. So what that basically means is you can go here and let's say click on Block Tower Andromeda, right? So previously, if you go here, the debt ceiling was 1.28 billion. So that was like the max amount of, I guess like T-bill purchases that this vault could have made. But now the cap is raised to 3 billion. It's not 3 billion yet. It's going to slowly go up over time. So this is like the dark blue line here, right? It's going to go up. And you can see that today, Block Tower withdrew $50 million worth of USDC and bought T-bills. So, as long as the DAI market cap goes up, both Block Tower Andromeda, this vault, and the Clydesdale vault, they're going to be able to just, redeem more USDC, right? You can kind of see this bump here, buy more T-bills. And what does that mean? Well, profits are going to go up. Revenue is going to go up. But I mean, yeah, there's like always pros and cons of holding these types of assets. If you view Maker as a defensive asset, then yeah, in a bull market, it's most likely going to underperform. But if you expect on-chain activity to continue, just like look weak, I mean, prices are going up today, but I don't really think that either can have sustainable pumps unless like on-chain activity is like ramping up, and I still don't really see that on the horizon. We don't really have any like useful applications. Of course, if Bitcoin goes to 40K, then all bets are off, and then the market spirits come back. But that's how I view the trade. So enough about Maker. Okay, I spent 13 minutes on Maker. This video is literally talking about Canto, so let's talk about Canto, right? I can't believe it. The price is not going up. What is going on? As I mentioned, Canto did drop their RWA product on Monday night, at least for me, right? I live in New York, and safe to say that the TVL growth has been not too great, right? We're still sitting at like let's say $55 million. But the thing is, this is being underreported. So if you let's look. So 0x NGMI, he is the founder of DeFi Llama, and they're asking Canto to update their subgraphs because like the new tokens that they launched, it's not really being picked up by the API or like whatever, right? I'm not a dev. I don't really know what's going on here, right? Because I'm just some like random dude online that like has no idea what's going on. But if you look at I guess like the total note, right? This is the over collateralized stablecoin. It's at 30 million. But if you remember to like my last video, or I guess I don't know if I talked about it, but basically last week the amount of note in supply was 15 million. So the note market cap has increased by 2x. But it's not being picked up by DeFi Llama because the majority of the note is in C note, right? And C note is note that's being lent out in the lending market. So C note is kind of like a DAI or a USDC, right? Where if you take USDC and you deposit it into Aave, you get a USDC in return. So it's like a receipt token. But just because this thing launched, it's not being picked up, and there's roughly $4 million worth of tokenized treasuries. So this is US yield coin, USYC. This is also not being picked up. So I will expect that sometime, maybe this week or later next week, the total TVL is going to go up to like 70 million. It's just like it being underreported right now. But it doesn't really matter, right? Because as long as people see 56 million on DeFi Llama, this is their source of truth. So like, until like it gets updated, I don't really expect Canto to go up because like I mentioned, yes, like price went up, but in order for Canto to experience the next leg up in price, you can't we have to see TVL growth, because if not, I'm wrong, right? Because my entire thesis is that I expect TVL to hit all-time highs by sometime like later this year, by end of year, and because Canto is an L1/L2 token, all-time highs in TVL should lead to positive price action in the Canto price, and that's kind of the entirety of my thesis. And there are some interesting farming opportunities. So if you look at the LP tab, so I guess like let's first define C note, right? So C note is note, right? That's earning like, let's say 1%, right? So it's a yield bearing dollar, and you can LP C note with USDC to earn 25%. So this is a pretty good farm, I think, right? I think it's one of the better stablecoin farms out there. And then if you want to, there's like other stablecoin farms, but to my knowledge, all the emissions that's going to note USDC is eventually like be migrated here. But things take time, and I'm being patient with it, right? I'm not like in a rush. Like my call wasn't Canto to all-time highs in the next 10 days. No, it was Canto to all-time highs in the next 10 weeks. So that's where I stand. And it's not picking up right now because note it has to be like a yield bearing dollar. And right now the C note is only yielding 1%. But like, why is this? So if you actually understand, or if you study how like the dynamic interest rate works, it kind of works like this. So if you look at Neo Finance, right? So this is like the RWA strategy. The entire premise is that KYC'd and whitelisted individuals, they have the ability to mint USYC, which is tokenized treasury, right? It's going to be yielding like roughly 5%, and you can use USYC as collateral to borrow note against it. And who is lending out the note for these borrowers? Well, anyone, right? Like you and I can like just take note and then lend it out to these borrowers. And if USYC, it's showing 0%, but it's like paying like roughly 5%. It's just like a UI error. If USYC is paying 5%, then KYC players, they should be willing to borrow note at 1% to, like borrow note, sell note for USDC, redeem USDC into USYC, and then kind of do like the carry trade. But I guess the problem here is that, well, if there's more sell pressure for note than, like buy pressure, then note is going to trade below peg. And that's kind of what's happening here. Note is trading at 0.9966. And, it's basically traded above peg throughout its entire lifetime, but now it's below peg. So, this is, I guess, a potential FUD event, because, you look at things like Go, right? This is Aave's over collateralized stablecoin. Let's look at it here. It just trades it's like can't get to like $1. So like, what the hell is the point of Go? And this is like one of the reasons why Go has not taken, like Go only has like a $23 million market cap. Like there's like not that much adoption, and that's because the rate to borrow Go is 2.5% fixed. So people borrow Go, and there's like no incentive to pay it back, right? Of course, they need to like pay it back if they want to free their collateral, but there's like no mechanism to get people to like rush to pay its loan. And then you can say that, okay, like the borrow rate is 1%. Like like what the hell, right? It's going to trade below peg forever. But however, right, note trades, the note borrow rate is dynamic, so it's not fixed. And I'm not sure why it's no longer in the docs, but I took a screenshot here of the previous docs where there's like this interest rate formula where if note is trading below peg, right, the system doesn't like that, right? So to incentivize people to buy note back, right, to incentivize borrowers to pay back its debt, if note is trading below peg, the interest rate slowly goes up every 6 hours. So this is a kind of a complicated example here. But let's say, right, I kind of wrote this up, but let's say note is trading at 99 cents for 24 hours. And for the sake of simplicity, let's assume it's constant. Then the increase in the borrow rate is going to be 1 minus 0.99 times 0.25, which is like the math here, right? The math here, right? 0.25 plus like whatever the interest rate is. So basically, if note is trading at 99 cents for 24 hours, then every 6 hours, every epoch, every 6 hours, the interest rate goes up by 0.25. So after 24 hours, no. If note is trading at 99 cents, it goes up by 1%. So similarly, if note is trading at 0.995, then every 24 hours, the interest rate goes up by 0.5%. And when I wrote this update 2 days ago, the borrow rate was 0.5, and now it's at 1. So you can kind of see that, okay, slowly and surely, the borrow rate and the supply rate, right, the lending and borrow rate is slowly going to go up, okay? And yes, like, this is going to continue to happen as long as note trades below peg. And what's going to happen if people are borrowing like note, right, to like do the whole like the carry trade? But if USYC is paying 5%, but the borrow rate gets to, let's say, 6%, well, that trade is no longer profitable. So what does that person have to do? Well, they have to buy note back to repay its debt, because they're literally losing money. So at some point, I don't really know what the number is going to be. There's going to be some equilibrium rate. And I would expect that like maybe if USYC is yielding like roughly 5%, maybe borrowers are willing to, borrow up to 4.75%, right? Just basic math here. And anyone, right, permissionlessly, anyone that's, using the blockchain can buy note or mint note and lend note out to earn whatever the borrow rate is. So sometime next week, I think, or like maybe like earlier, so sometime by end of this month, I would expect the supply rate and the borrow rate to be like above 4%, like somewhere in that ballpark. And if you think about it, right, that should bring more demand for note because you can literally earn 4% on stablecoins, and you can take note, supply it, get C note, right, yield bearing dollar, and then LP it here to earn, whatever the rate is going to be, right? So if note is paying 4%, then this LP position, right, if you put $10,000 in here, then you supply $5,000 with the C note, $5,000 with the USDC, that position alone is going to be paying 2%, right? Because, half of it is earning 4%. And then you'll also get CANTO emissions on top. So that's, if you kind of just like look forward, right? Because if you're making investments into like this type of market where there's like not that much liquidity, people are, like generally jaded, people are feeling apathetic, you kind of have to invest for the future, right? That's kind of how like investing works, like in all markets. But you can't just like view like the TBL now and be like, oh yeah, like this is bearish. You have to study it and be like, well, first of all, this thing is being underreported by like 15 to 20 million. I don't really know what the exact number is. The dev has to update it. So let's say it gets like 70 million, right? But like as more time goes on, as note trades below peg, the interest rate is going to continue creeping up, and as the interest rate continues to creep up, it's going to increase the demand for note, and eventually, the Canto devs, right, they want note to continue growing, and at some point, note is going to be backed by treasury bills, right? So it's going to be a yield-bearing dollar. So it's a pretty similar thesis to the Maker trade, right? So Maker just continues to make money because the market cap continues to go up, and the amount of DAI in the DSR, earning 5%, continues to go up. So I do expect the market cap of note to just like look like this. I'm not saying it's going to get to $1 billion. That seems pretty optimistic. But like what I care about is the rate of change in the market cap of note. And this week, literally like the note market cap doubled, right? So if it doubles next week, it's going to get to 60 million. Then it's going to get to 120. Of course, as the market cap goes up, then the rate at which it increases is going to decline, right? I mean, you can't expect it to 2x every single week. But that's kind of the bet I'm making. And like I mentioned, if CANTO is an L2, right? If it becomes like an RWA L2, right? Real world asset L2, then I think that, CANTO has to be repriced. Because if you look at the price of CANTO, in the initial pump, this is purely hype, right? Whoops, this is purely hype. Right? This is purely hype, right? Like people were like just talking about it. It's like, oh my God, like CANTO is the future of finance. But there's like nothing you can do on the chain, right? I mean, literally all you could do was to buy and sell CANTO and like buy some NFTs. And at some point, like people get bored and people sell because there's nothing else to do. And this is kind of the case for mainnet as well. If you go to ultrasound.money and you kind of scroll down, the majority, but basically people use Ethereum to like buy tokens on Uniswap, buy things on OpenSea, move Tether around, move Ether around, and then bridge to Arbitrum. Or sorry, this is not bridging, but like sequencer fees. So initially TVL went up, then it just went down and kind of died. But the bet here is that, okay, well, this is a pretty compelling product, pretty interesting farming opportunities. This is like really good stablecoin yield. If more money flow on here, then the metrics of CANTO look better. Then maybe people buy CANTO, and that's going to increase the price of CANTO. And if CANTO price increases, then the emissions, these APRs are going to increase, and that can be some reflexive cycle. And then there's always like the value, like the argument around like, okay, like what's the value core, right? Because at least the maker, like they're literally buying back its own token, right? It's pretty obvious where the value accrual is. But in this case, like there's like no buybacks. It's an L2. And I do agree that there isn't, like I would be lying to you if I told you that, okay, like the value accrual for CANTO is this, because it's not that clear. 80% of transaction fees that people pay on CANTO does get burned. So there's that. But also, right, it's like the fees are so cheap that it doesn't really matter in the grand scheme of things. I will say that, if you look at like the valuations of like L1s and L2s, it is like pretty high, right? Like Cardano's 11 billion, Tron's 8 billion. Tron's also interesting. This is something that I was like looking at. But if you look at the past 1 year price action for Tron, it's literally up only. And then if you look at, if you go to categories on DeFi and Llama, go to RWAs, click here, you see that, okay, like Maker obviously owns the most amount of treasuries at roughly 3.2 billion. And then there's staked USDT. This is on Tron, right? And, like it's going up only, right? So, like these L1/L2s that can, facilitate tokenized treasuries, and, get more TVL, get more usage. I guess the market likes it. And look, I'm not going to buy Tron, right? I do not own Tron. I don't care to buy Tron. I do not want to be Justin Sun's exit liquidity. But I mean, I do think this is pretty interesting, right? And if you look at the Ether chart, right? I mean, it literally looks like the MKRETH chart. So that's also interesting. So, like what is the value accrual? I'm not quite sure. But I mean, you can look at Tron as an example of what could happen to these RWA tokens. I think my channel gained a lot of popularity when I came up with the alt L1 thesis, right? I came up with this in April of 2021, and then for the entirety of the year, right? That's like all people cared about. And when I came up with it, I got a lot of questions around, okay, like, well, I get that, Polygon is cool, but like transaction fees are so cheap. Like, who's gonna buy this thing? But literally, right? Like, if Polygon TVL was going up only, then how do people speculate on that, right? Like people love to speculate, And also, if you wanted to go on Polygon and farm, and use the applications, you had to buy Matic, not for the gas, but if you wanted to farm like DEX tokens, for example, you needed to buy Matic, pair it with Ether, and then LP, right? So like that also creates incremental buy pressure for the Matic token, and then there's like a reflex loop that happens as a result. And then this happened for Avalanche, and I came up with like the Avalanche thesis and whatnot. So it's not that different. it's little about value accrual, but it's more about narrative. I mean, that's the reason, right? It's like, okay, like my entire thesis is like Maker, right? The MKRETH thesis is like what supports Canto. So if MKRETH just like nukes, then, you know, like I need to like look in the mirror and like do some reflection of like, what are you doing, techie, right? I might need to take a cold shower. But my view is still that, okay, like, you know, I mean, literally DAI market cap is growing. Estimate of annual profit. And by the way, these are estimates. They're not actually real. If you go to the collateral list, you see that, you go, yeah, like the block Terra Andromeda, right? They're with about $1.3 billion, they're making like 4.5%. The Clydesdale Vault makes like 4%, but these numbers are actually closer to 5% because they're getting better at clipping yield and, you know, it's getting rid of inefficiencies. So the real number is actually close to like 100 million, right? Or like 90 to 100 million. That doesn't really matter, right? Because, you know, the market participants, they just like check this number and this is their source of truth. Even so, but, you know, like, yeah, like I know for a fact that the actual profit estimate is higher. So, you know, like if the estimate is like, let's just say, for example, like, you know, this is 100, right? 100 million, like in reality. But the market doesn't know it. But the PE ratio, 16.81, has to remain constant. Well, if you just, you know, if you just assume that the PE ratio has to be constant, then that's going to price Maker as $1,681. I mean, obviously, right, like PE ratios are dynamic. It doesn't make sense to use PE ratios. I'm not really making a case for that. I'm just like just sharing my general views on the market. But like I mentioned, you know, if the market enters up-only conditions, that could be bad for the thesis. So that's something to consider. I talked about this here. But I was also thinking, right, like maybe this is copium, but like if Maker is a defensive asset, and then Canto is more momentum driven, then maybe it's good to own both, right? Because if the market just goes sideways, then Maker is going to go up, and maybe Canto doesn't do that well. But if speculation comes back in the markets, then maybe Maker underperforms, but Canto goes up. It remains to be seen. I think what needs to happen is, first of all, more TVL to grow, right? We need more TVL. We need more TVL to grow. Right, here we go. Yada, 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 right? We need this to go up. And then, you know, like the DeFi Llama devs, right? What are the devs doing, right? The devs have to update this. And, you know, I mean, even if we get to 70 million, like that's still bad, right? Like this needs to get to like all-time highs. So hopefully, you know, I've laid out my thoughts on where we are on the Canto thesis. Hopefully you found this somewhat useful. And, you know, if you want to get daily updates and, you know, get premium videos, you know, I post two premium videos every single week, as long as a live stream, as well as like daily updates for the largest premium DeFi community in the world. So if you're interested, please check out the premium Discord. Link will be in the description below. But, you know, so far, touching on the Maker-ETH ratio again. Let me hold up. Okay, touching on this Maker-ETH ratio again. As long as this is going up, I still like Canto. If this starts to go down, then I don't know. Then I have to rethink the entire thesis. But you know, like who cares, right? I mean, you know, this week we're down 3%. But literally, I mean, this is like the trend, right? So I'm not that worried. And I think the market still needs to reprice Maker, just because, you know, people have cognitive biases against it. People don't believe it. But literally, just go to makerbird.com, look at this, and yeah, like, how can you not like it, right? I mean, yeah, like, I really like this this asset. So thank you guys for watching. See you guys another time, and have fun farming out there, and let me know what you think about the entire thesis around Maker and Canto. Bye-bye.